Hey everyone, this is C Crypto Daily Buzz. Today is May 13th, 2026, and this channel summarizes the most important crypto news for investors in Southeast Asia. Let me walk you through the top 3 stories shaping the market right now, with a calm read on what they actually mean for traders here in the region. Bitcoin is sitting around $8,500 after a rough macro session, and the trigger was a hotter inflation print. US April CPI came in at 3.8% year-over-year, above expectations with a gasoline-led headline shock, and core CPI also surprised to the upside at 2.8%. Oil pushed above $100, the dollar index climbed to the 98 level, and BTC fell from $82,000 down to a $79,800 low before stabilizing here. Still, the picture is not one-sided. US spot Bitcoin ETFs flipped back to a small net inflow of about 40 billion Korean won. And alt money is rotating out of Ethereum and into Solana while roughly 390 billion won in derivatives positions were liquidated. For Southeast Asia traders, this is the textbook macro vs flows tug of war. If CPI keeps printing above 3.5% into June, the Fed cut narrative gets pushed out further. And that is the scenario where leveraged longs from the Philippines, Vietnam, or Indonesia get hurt the most. Watch the next PPI print and let confirmation come to you instead of chasing. The supply side of this market just got a lot more interesting. Mara Holdings disclosed it sold 20,180 BTC during the first quarter, one of the largest miner-led distributions we have seen this cycle, while BitMine cut its ETH accumulation pace to roughly 1/4 of its earlier rate, saying it is close to its 5% target. On top of that, Strategy CEO Phong clarified the company will only sell BTC under 2 conditions: to fund the STRC perpetual preferred dividend or to optimize taxes through realized gains or losses. So, we are watching a clear split among large holders, miners distributing, treasury companies slowing accumulation, and Strategy keeping a tight selling discipline. For C investors, please read this as a maturity signal rather than a bearish one. The era of unlimited miner and treasury bid is fading, and that is exactly why ETF flows and spot demand will matter more than ever from here. Position sizing should reflect that supply is no longer scarce by default. A double story on hacks and accountability this week. ZachXBT publicly identified the attacker behind a $19 million bridge exploit. With the breakthrough coming after the hacker showed off wallet balances online, a reminder that even sophisticated thieves leak operational security under their own ego. Separately, Syndicate, the team behind Syndicate, completed full compensation for victims of the common bridge hack, distributing 12.9 million SYND tokens to affected wallets, equal to the lost value plus an additional 15% on top, with gas fees absorbed by Syndicate Labs and no claim form required. These 2 stories matter for Southeast Asia because bridge and DeFi exposure is heavy across the region, especially in the Philippines, Vietnam, and Indonesia. The takeaway is simple: choose protocols that maintain a real on-chain compensation track record, and treat any project that has never publicly recovered user funds after a breach as a higher-risk counterparty until proven otherwise. So to wrap up today's 3 stories: 1. CPI 3.8% shock. BTC 80.5K, oil $100, ETF flips back to Inflow. 2. Mara sells 20,180 BTC, BitMine slows ETH, Strategy keeps discipline. 3. ZachXBT unmasks 19 million bridge hacker, Syndicate repays victims plus 15%. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. Chart analysis and trading insights. Join our free Telegram channel, link in the description. See you in the next one.